All right. I promised you we were going to talk about dividend investing. And, this is something you hear all the time out there from these people that love dividends. All right. Well, maybe you shouldn't be that excited to get dividends. I actually still do get excited when I get dividends. The ETFs and mutual funds I invest in pay dividends. And in the taxable account, that's money we could use to live off of. I mean, we could live just off of our dividend income. And some people get excited about building a portfolio of dividend stocks that could provide that same thing for them. But getting a dividend really shouldn't be that exciting. You see, a company, a stock, that's what a company is. That's what a stock is a company. They have a choice of what to do with their profits, right? They can keep it in the company, find some way to reinvest it and make money off it, and the value of the company goes up. Or they can send it to the owners, right? It's the same decision I have every month with the white coat investor. White coat investor makes some profits. I can figure out a way to reinvest that. Maybe we buy some advertising. Maybe we hire somebody else to help, those sorts of things. Or I can take it as a dividend. It's the same thing that every CEO and every publicly traded company across the country has to make that decision every year. Are we going to pay out dividends or are we not going to pay out dividends? And so the company's doing exactly the same, whether they send you a dividend or not, right? They make the same amount of money. The problem with getting a dividend is you have to pay taxes on it, at least if you're investing outside of a retirement account. So rather than being able to choose when you take money out of the investment by selling a few shares of it, you're forced to take money out of the investment and in a taxable account, pay taxes on it. Hard to be excited about paying taxes on income that you don't actually need yet. And so that's why maybe getting a dividend shouldn't be really all that exciting. But people get super excited about it out there. I think the issue is they start looking at those dividends and they compare what's coming in dividends to what they're actually spending. And they figure when the dividends equal what they're spending, now they're free. They don't have to work anymore. But the truth is, they're probably free long before the dividends equal what they're spending. Because, the stock market these days has a dividend yield of something like 1.5%. And so if you wait until you can live off just the dividends instead of, a 4% sort of withdrawal from the portfolio, you will actually have a portfolio that's over twice as large. That's going to take you another decade to acquire. You will have oversaved. And so that is the main issue with dividend investing. If you are committed to only spending your dividends, I want to be your heir, right? Because I'm going to inherit a whole lot of money. On average, taking 4% out of a portfolio every year, after 30 years on average, the portfolio is 2.7x the value of the original portfolio. If you're only taking out 1.5%, you can imagine how much larger that portfolio was than what it started with when you retired. But the bigger problem, than just oversaving, the bigger problem is people start looking for investments that pay out more than 1.5%. So they find a stock that pays 5% or 6% or 3.5% or whatever, and they preferentially invest just in those stocks. And the problem when you do that is you start taking on uncompensated risk. You're no longer diversified. You're taking risks that you're not being paid to take. And it can also cause a lot of people to fail to even look at their total return, which is really what matters. Because there are investments out there that will pay you more income than they're actually making. So if the return on the investment is 5%, and it's paying you 8%, your investment is shrinking as you go along. That is not a sustainable situation long term. And so you got to be careful about that. A lot of people sometimes also mistake dividend stocks for bonds, right? Yeah, a stock pays a dividend and that's income, and bonds pay, coupon payments, these interest payments, and that's income, but they're not the same thing. Okay? Dividend stocks can drop dramatically in value. The stock can stop paying a dividend. It is not the same thing. There's a lot more risk in owning a stock, even if it pays a dividend, than there is in owning a bond. The truth is buying dividend stocks is really just kind of tilting your portfolio toward value stocks. And it turns out there's a lot more efficient ways to get a value tilt in your portfolio than investing in dividend stocks preferentially. You can just buy a value stock index fund. You will have a higher dividend yield. You will have this similar tilt to your portfolio. You will have similar portfolio performance, and you don't have to go out there and select individual dividend stocks, much less a dividend focused mutual fund. The counter argument to this is that, well, if the C-suite of the company has to pay a dividend, they'll manage the company better. And maybe there's a little bit of truth to that. But that's, long term, when you look at the entire market, that's really not a factor that causes you to do better by focusing on dividend stocks. All you're really getting is a value tilt, and this is not the best or most efficient way to do that, according to the studies. This doesn't necessarily hurt you so much in a tax-protected account like a 401k or an HSA or 529, but in a taxable account, you're paying more taxes than you have to if you are focusing on dividend stocks exclusively. Hope that's helpful to you, and as you design your portfolio, and don't get lured by the siren call of dividend stock investing.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.